Shares of Palantir popping right now after the software company reported earnings moments ago. U.S. commercial revenue up 54% versus last year. And you see a U.S. government revenue also jumping 40%. Stocks up about 14% right now. Joining us now is Jefferies analyst Brent Thill. Brent, it's good to have you on. Want to get your initial reaction to these results, which really do show strong growth across the different businesses, particularly where U.S. business is concerned.
Yeah, they had a great quarter, 30% top line growth, 38% margin. So it's not just a top line fueled story. It's also balanced by bottom line. And the rule of 68 is pretty rare in software. So the results are fantastic. I think the biggest concern on everyone's mind is still valuation. It's the single most expensive name in software. It's twice the multiple of CrowdStrike, which is a very well-run company. So when you have a company that's multiple to 2x that of one of the best-run stories, that is something that I think investors are still somewhat concerned about. But the print itself was fantastic and shows again the position that they're leading in AI, and it's good to see the government business also show an acceleration as well.
I'm glad you brought up the rule of 68. We always talk about the rule of 40. The fact that they're at 68%, I think that makes them the highest of the tech companies, maybe slightly higher even than Microsoft. I mean, it's something that CEO Alex Karp spoke to me about, and he basically said the reason they have such a strong rule of 68 is because they don't have any marketing. They barely have sales. That's where people tend to spend. So the fact that they are very focused on their engineers and they're very focused on customer support to their customers, both on the government and commercial side, how many levers then does that give this company to pull as it pushes further into this AI application layer?
Yeah, I mean, Alex has said this for years, that they have no sales and marketing, and then everyone scratches their head like, if this is this big opportunity, why aren't you applying more sales resources to this problem? And again, every time he says that, I literally scratch my head. I don't understand it. So to your point, if they could actually add an enterprise team, if they could market more proactively to the Wall Street community versus just the retail community, and I think there's so many steps they could take to unlock more value from this. And I think the analogy I had was at the beginning when Musk had the Tesla, it was a car that very few could afford, right? And now with the Y, everyone can afford it. Not everyone, but a lot of people can afford it as a car, right? Versus the higher end Tesla. And so I think their move is the same move, which is how do you go from very high end, only a few people can adopt you, to now mass market? And I think it may not be the perfect playbook, but I think they're following that playbook. I think everyone can come to Palantir. They're trying to get you to start small, get big with them over time. Before it was just, hey, you got to write a big check. So I think there's a lot of levers. Again, approach to Wall Street, approach to deal sizes, building that sales team. There's a lot of levers that they can still pull that they haven't. Remember, well, Brent, this is an easy comp too. This is an easy comp. Comps get harder now.
Product-led growth makes sense to me. I mean, Atlassian and others have done it, only spending as much in sales and marketing as you have to. They seem to still be selling. I don't personally know Alex Karp, but it sure seems to me like he's taking a shot at Analyst every chance he gets. You've got a hold on Palantir. It's up more than 12% after hours. Maybe he's talking about you. What does it take to get you off of a hold here with as high as this stock has gone?
Yeah, he likes to attack us and say that we still stay in Motel 6s, which is fine. I'm okay with that. Yeah, I mean, look, I think the challenge we have as analysts is we're here to protect investors. And the companies, in terms of the financial momentum, is an A. But when you have a multiple at 30 times, and we've seen this movie before, John. I mean, you've had Snowflake trade at 50 times revenue. You had Datadog at 30 times. How did those multiples end? They're all materially lower. And so we think, again, the challenge right now is you're in a level where you have no one in their remote atmosphere in terms of the multiple. So you're going to have to go back to a TAM analysis and believe, almost like when ServiceNow was 30 billion TAM, did you think it was going to get to 175 or $200 billion TAM? And that's the only way you can make it work right now. For long-term investors, you have to look at it that way. There's no other way to value it. I mean, there's just nothing remotely close. I mean, CrowdStrike's a company that serves way more people than Palantir, and has half the multiple and is the next most expensive name.
Yeah.
So, I mean, it's just, that's the hard part. Momentum's there. Valuation is the concern.